a big day for you guys over at the exchange. First, the environment and the timing of this is quite interesting, right? Coming at a time when some foreign investors are a bit wary about investing in China. What sort of demand do you think this product is going to have?
Thank you. Thank you for having me here today. I think it's important that we look into the trajectory of how global investors' interest in China shares, no matter it's Hong Kong or access to domestic. I think over the course of last couple of years, we have seen a consistent growth in terms of global interest represented by their stock holdings in domestic A shares as well as Hong Kong stocks as well. So I think we are still at a very early stage of that allocations into China, and it will take many, many years to go. Obviously, we do recognize there are short-term some noises around in the markets and volatility that's being seen. But I do think that it's important to focus more onto the long term and the trajectory path that we are looking at the moment.
And so I guess, maybe tell us a little bit more about what sort of earnings boost could this have for the exchange? How much revenue do you expect from these A50 futures now? Goldman Sachs saying, look, it could be about 5% by 2025. Is that a reasonable estimate?
Well, I think today is the first day of trading, I love very much to have a crystal ball in front of me, but I do think that it's important for us to actually, as market operators, is to offer the product and the choice to the market that they need. And in particular, now when we put the MSCI Connect A50 futures onto our platform, it actually makes Hong Kong now to be the world's most competitive and most complete China offerings. You can think about it, there's A shares, there are Hong Kong listed China shares, there are China ETFs, there are structured products that are based on the Chinese underliers. It forms a pretty interesting ecosystem for global investors to play. And I think it is that ecosystem that will bring along a lot of revenue potential and growth opportunities.
There are some analysts out there that say that some of these MSCI index-based futures usually have negligible revenue for the first few years, Wilfred. What are you doing at the exchange to try to change that, or at least boost things a little bit more so that they can gain more traction more quickly?
Yeah, I think there are many things I think that we are looking at and we have been looking at historically. And most importantly, when you think about the investors' demand, what do they want? And you have to start from the demand side of the equation, and therefore our supply side would naturally makes a lot more sense to them. So from Hong Kong perspective, I think it's important to realize that we already have a very strong Hang Seng flagship family, for instance, in our derivatives platform. The addition of the A-share, Connect A-share futures is going to complete that China offerings to our investors. And therefore, I think when people can be trading a lot of these different products alongside with the MSCI EM Asia product suite itself, actually allowing a lot more investors that they can trade Asia in Asia time zone. And when more core mass are being built up over the years, we're going to see a very steep trajectory of growth in the derivative area. And that's why we are making a very strong commitment into growing our derivative franchise and building Hong Kong as the derivative and risk management hub.
All right, maybe can you quantify that a little bit more? I mean, what does this piece of news mean for your derivatives growth, and how do you plan to boost this ecosystem now?
Yeah, I think what we have been gathering from the market demand perspective, we have seen all ranges of investors, institutional investors from global background, and also local investors in the region who are actually very interested in the product itself. And I think it's important to realize that the product itself is offering a sector balance approach, which allows, I think, a lot of investors more effectively managing the risk. And also the lower cost nature of the contract is going to allow lowering the bar of entry for a lot of the investors to use the tool. And the last point I do want to make is the one-stop shop concept that I've been mentioning not only here, but a couple times in the past. It's really, I think, what the market is looking for is finding that one place that they can actually effectively trade, clear and settle their transactions and manage the risk.
Wilfred, analysts have pointed out higher trading costs as a concern. Do you think that index turnover of the overall underlying MSCI index could actually lead to higher trading costs?
Well, I think trading costs there are many dimensions that you have to look into trading costs. There's obviously direct trading related, and there are also exposure management transaction costs. The name of the game is actually ecosystem and what kind of a product offering that you're offering with a broadened kind of group of franchise. I think on both of those dimensions, we have been making continuous progress in broadening the franchise context in terms of the product offering that we are putting on our shelves. But at the same time, broadening a lot of our investors' interest on our platform.
And of course, you're going to be competing against Singapore now, which of course has a more mature derivatives market. They're also maybe considering doubling the number of members on their products to 100 large cap stocks now. How do you think this is all going to play out here in terms of flows and how this competition is going to really kind of play out?
Yeah, I think there's certainly some level of competitions going on there. But importantly, I think from HKEX perspective, we're looking at continuing our support in terms of our providing a very reliable and resilient marketplace. We have been very consistently outperforming many exchanges in the world. And we have a track record of building a deeper and more liquid, diversified financial marketplace. In particular, if you look at our cash markets kind of ecosystem that we built over time, the increase in volumes that are traded in cash market will lead to naturally the demand for derivative products that goes along with it. So I would say that we have our competitive edge, we have our area of differentiations, and we just need to focus a lot more onto derivative platform, in particular allowing our investors to trade Asia in Asia.